He's the producer of the Big Gold investment newsletter, Big Gold. Jeff Clark joins me now at the Grand Cayman Liberty Forum. Jeff, thanks for being with us.
I'm glad to be here.
And what a day to talk about gold as we really come to the close of the year here, Jeff. We're seeing a lot of volatility in the gold market. What do you make of the price action?
You know, to be honest, I obviously watch the gold price every day, but I don't make a lot of, put a lot of stock into or worry a lot about what the gold price does on a daily basis. Daily moves are almost meaningless in the big picture of things. If you're buying gold for the right reasons and you're a long-term investor and you view it as a store of value and it's something you're going to hold to protect yourself against what we think is almost inevitable at some point, some type of crisis, monetary event, whatever the case may be, you don't need to worry about the daily fluctuations in the gold price. A lot of the movements now are short covering, so that's going to be normal when you have a lot of short interest out there.
So let's talk about some of the stories to watch when looking at gold. ECB may buy bullion to basically counter low inflation. We also have the Swiss vote coming up. We have Putin loving gold these days. What are you watching and reading closely, Jeff?
Well, Putin's loved gold for a long time. I don't know if he loves gold, but he sees the practical value of holding gold, especially in the current environment and the relationship between his country and the United States and all that's going on there. The Swiss gold vote, the referendum vote is coming up November 30th. That'll be interesting to watch. I do think that there will be a pop in the gold price if that does pass, but there are a couple issues there. If it does pass, they have 5 years to meet that 20% requirement. So there'll be a lot of excitement in the gold industry if it passes. There will be a pop in the price, but it'll probably level out after that because they have 5 years to meet that requirement. The other issue to keep in mind is, in my opinion, I'm not sure that Swiss vote is going to pass. Even if it does pass, it's got to go through their parliament. Most of the politicians there are not in favor of this. It's going to handcuff them. They're not going to be able to print as much money. Their balance sheet is quintupled since 2009, even more than the U.S. So it should be passed, and they've been selling gold. So this is be a good thing for their country, but they definitely don't want it. And so I don't know that it would go through their parliament. But again, we don't buy gold because the Swiss may pass this vote. We buy gold for other more core reasons. So. And then the ECB, I'm not sure what to make of that at this point because he said we could theoretically buy gold. So who knows what a politician making some minor public comment could really mean by that. I don't trust a lot of politicians. They make things like that. That could be a trial balloon for all we know. So I don't know how much stock to really put in that at this point.
So let's talk silver now, because I know earlier in the year, in the summer, you were saying, look, it's as close to a no-brainer investment as it gets. Do you still feel the same today?
Absolutely, because for any number of reasons, I think silver supply is going to fall. I think demand is only going to go up, whether it be from solar, whether it be from investors, whether it be from the hundreds and hundreds of additional uses we find for industrial capacity. So there's a lot going to be on the demand side. Supply is going to be short. It's a small part of the overall financial picture. It's a tiny, tiny industry. It can move very dramatically. But again, the core reason why we buy silver is for its monetary value. That's why most investors are buying. That's why SLV holdings have not dropped while GLDs have. SLV holdings are actually going up. Retail buying is still very strong. So all those reasons can point to the fact that it really is at $16 an ounce, a no-brainer investment, because even just adjusted for the CPI, it would be over $100.
So it's a buy for you now?
It's totally a buy. And actually how I view it is, I view it as an accumulate. So you don't have to buy it all at once. You can just continue to accumulate, and if it does drop further, you just get a better price. You get more ounces for your dollars.
How about the mining stocks? Are those a buy now for you? Do you like them?
We actually have a hold on many of our stocks right now because we just don't know where the bottom is. And in fact, if you see some dry up in the buying, physical or shares right now, we think it's only going to be because people don't know where the bottom is. They want to wait until they think the low is actually more in and they see a more sustainable or stable uptrend. Then I think you'll see a big return to a lot of those shares. But there's no doubt that prices are at ridiculously undervalued at this point. Barrick Gold is back at its 1992 price, for crying out loud. So the value is definitely there. It's only a matter of when is it going to turn, what's going to be the catalyst, and things like that.
Jeff, is there any other investment you're liking right now?
Well, what I personally am doing is I'm continuing to accumulate gold, I'm continuing to accumulate silver, but in the big picture, what I want is really hard assets. So I don't trust the paper market, I don't trust stocks at this point. I'd rather be buying something physical. So that, for me, that's going to be gold and silver to start with. I'm also into uranium. I also like a lot of the energy investments that we have right now. I have a private placement investment in a natural gas, several natural gas projects. So I'm all about the hard assets, getting out of paper, the same reasons that I buy gold and silver.
And what a run up in uranium that we've seen, Jeff.
It has been a big run up, and I don't watch that market real closely, but I have some investments there. We have a whole energy division that watches that, but that's very interesting. It looks like that market is getting ready to turn, so boy, it could be an exciting next few years for uranium investors.
Finally, Jeff, you're a speaker here at the Grand Cayman Liberty Forum. What's the sentiment like on the floor? You're speaking with the attendees. What's your takeaway? What are you getting?
Well, what I'm talking about is internationalization, using gold as a way to internationalize your portfolio. And definitely a lot of people see the writing on the wall. It's becoming very clear. The evidence is actually growing that you should diversify and hold a portion of your assets outside of your home jurisdiction. But there's a lot of, the good thing about the bull market is that there's been a lot of increased options available to us, and they've gotten better over the years. And so now we have a lot of very effective solutions for diversifying internationally, and so that's what I've talked a lot about. I think it's inevitable that at some point there'll be some kind of capital controls. They may not call it that, but I think it's inevitable that it comes, and I think having a portion of your gold outside of your country is just an excellent diversification strategy for everyone.
Jeff Clark, thanks so much for joining us today.
Thank you.
And thanks for watching our coverage from the Grand Cayman Liberty Forum. We want to hear from you, so please email us newsfeedback@kitco.com. Thanks for watching.